Okay, good afternoon, ladies and gentlemen. Can you all hear? Excellent. So if the noise does get too much for you around the back, feel free to move forward to the front. There are one or two empty seats at the front. My name is Phil Potter. I'm the West Midlands Regional Advisor for UK Export Finance. That is the UK government's export credit agency. And we've been set up now for nearly 100 years. And the whole purpose of us being there is to help exporters. Principally since 2011, we have re-entered the market specifically to help small and medium-sized businesses, so what is referred to in government circles as SMEs. We acknowledge the fact that in the marketplace there are challenges around getting credit, and sometimes when you, the exporter, go out and win some good business deals overseas, you may not quite have the right strength to go out and get the lines of credit you might need. Hence the reason why we're there to help you to get what you actually need to get your products overseas to help out UK PLC. So UK Export Finance. We have a department called Trade Finance and Insurance Solutions. That's the team that I work for that works specifically with the smaller exporter needing access to finance. And basically we do that in three ways. Firstly, we share financial risks that the private sector can't manage on their own. Principally that area is around credit insurance. We also look to help to increase the private sector capacity for risk. And what we're talking about there is working with the banks to help them to provide more facilities for you for export contracts. And the third part of the role, which is pretty unique, is the fact that we have a mandate to help to equip you with the knowledge that you need to both arrange trade finance, if that's what you want, and to signpost you to alternate solutions. Most businesses are used to going straight to their bank and asking them for help and guidance and support. But there is a whole wide marketplace out there, not of other banks, but of other providers of services. And our job as export finance advisors is to understand what's available and to help to find the most appropriate thing for you to actually use for your business and to introduce you to those people that might be able to help you to do that. So I'm going to talk specifically about my role as an export finance advisor. So clearly the government schemes that have been brought out, which I'll go through in a bit of detail shortly with some examples, we're there to help to bring those schemes to the marketplace. So that's helping to work with the banks and helping them to get their awareness and understanding of what we do very clear. Working with insurance brokers so that they understand how our insurance policy can help them to service their client needs. And obviously, fairly importantly, working with the exporter to make sure that they can access those schemes. Quite critically, what you get from us is free, impartial advice. We don't charge a penny piece for what we do. We have no sort of objective or target to deliver government products. We're there to service you and to find the right solution for you, and therefore our advice is totally impartial. I mentioned earlier, we look about the non-bank solutions that are actually out there. Before the financial crash, you had a plethora of international banks from all over the world operating in the UK market. And very soon after the sort of the financial meltdown occurred, those banks started to go home. Some of them have gone home and probably will never come back again because they're not actually existing anymore. They came here because of the opportunity, and the opportunity is now gone. But those gaps in the marketplace are being filled by other providers of finance. And my job is to find them and to bring them to you if it's appropriate for your business. You may or may not be aware that every region, every local enterprise partnership, and pretty much every county council or county in the UK are trying to access schemes for their own businesses. They're trying to access finance for their own businesses. They're accessing money through European funds. They're getting money from the government under regional growth funds and trying to package them up and create small packages for you, the exporter. Now again, you might be aware of these things. My job is to try and find out what's going on in all of my 6 counties around the West Midlands, and my colleagues around the UK find out what's going on in their part of the world to bring those to you as well, so that if they are appropriate and available to you, that you get a quick signpost. We are a single contact point for you to actually try and find your solution for your export finance needs. What we do save you, if nothing else, is a huge amount of time, probably at the end of a very long, busy day trying to manage the day-to-day business, and to prevent that Google search sending you down all sorts of alleyways that you don't find an exit from. So that's the role of the Export Finance Advisor. Now I'm going to talk a little bit about the products that we provide, and I'm going to try and do that, as I say, by painting some pictures around some stories I can tell you about businesses that we've actually helped. And we'll start talking about export insurance. No business wants to sell their goods and services only to find they don't get paid. That really is the road to ruin. Very many businesses, though probably not enough, tend to insure their goods and services, or their buyers certainly, against the effects of non-payment. When you're looking at export markets, in most marketplaces there is a very active and supportive credit insurance market in the private sector. But let's paint a picture. Let's say you're exporting your goods and services out to Hong Kong. Let's say you're a small business and you've won your first overseas contract. It's not a big contract. I know the number on the screen says here it's £10,000 minimum contract value, but let's talk about your first contract being £4,000. Let's say you're a service provider, you're a translation company, and you've won your first contract to actually translate the website of a Hong Kong airline into Japanese so that they can actually tackle the Japanese market. Japanese is a very technical language, and the chances are there aren't too many speakers who have both the industry knowledge and the technical Japanese to actually do that translation. So let's say you have to buy that service in. So you've got to pay out good money out to a third-party provider of services to you whilst you invoice your buyer overseas in Hong Kong and before you get paid. It's your first contract. You don't get paid, you've paid out somewhere in the region of £2,500 out to your translators, and all of your overheads, all of your costs of your business, all of the money for the food to go on the table for the next few weeks is wrapped up in that margin you've got out there. So would you want to go to sleep at night knowing that you've got that covered? Now the private sector is fairly active in Hong Kong, but if you went out to cover that one single contract, you'd probably find that the actual price for doing that, because there is a single risk that the insurer is being asked to cover, could be quite expensive. If it is quite expensive and means it's not really something you can actually do, then you can approach the government to see that we can provide that cover. This particular case, I can't mention the name of the company, but it is a business that we actually helped here in the West Midlands. We provided the insurance for our basic minimum premium fee of £250. He went to sleep at night knowing he would get paid. So he delivered under his contract. He did actually get paid. There were a few concerns that it might be a little bit delayed, but he did get paid. But it's that comfort. That's what insurance is all about. On the slide you can see that it specifically mentions that we don't cover EU or OECD buyers. Now these are rich OECD markets, such as the States, Japan, Australia, Canada, New Zealand. It's not the other OECD members. But within the EU there's only one market we can actually provide cover on. And if I were to take a straw poll, I guess you'd probably say it was Greece, and you'd be right. The EU have decided that Greece is not a marketable risk, and therefore we are able to provide you cover in that marketplace, and we have done on several occasions. But there are rules around where we can go, EU rules, preventing us actually going to certain of these marketplaces. So that's export credit insurance. It's the peace of mind. It's principally for those exotic markets. If you're actually targeting or actually exporting to markets which are not your normal EU markets just over the doorstep, this is where we can help. And if you've got a whole range of exporters that you want to cover, this is not for you either, because we only do specific export contracts. So we'll take a one-off contract, but we won't cover all of your export book. That's where the private sector work better for you. So that's where we actually help with exporters under credit insurance. Let's talk about where we work with the banks to help to increase their capacity. We have two schemes. One's to work with working capital, and the other is to work with bonds and guarantees. Let's paint another picture for you. Let's say, and forget the numbers in this because the numbers aren't really important. You can take a naught off, add a naught on if you want to. But let's say you're a manufacturing business who are I don't know, running at an annual turnover around about £4.5 million, £5 million, and been doing that consistently year in, year out for 10, 15 years. You've always had trouble, because you're supplying the oil and gas sector, being able to get directly to the buyers. You always have to provide your services through a subcontractor, somebody who's already got the contract with the main buyer. And the reason for that is if you went direct to the main buyer, they will automatically ask you for a bond to support your performance under that contract. And if you as a small exporter actually want to get some money up front, which is a great thing to try and do, you also need to give a guarantee back to that buyer to ensure that he gets his cash back if you don't deliver. So you're a business that's been trying to break into that market but haven't been able to do so. The business I'm talking about actually won a contract for £1.67 million. Now this, in relation to its overall turnover, is a fairly big contract. But it needed to provide an advance payment guarantee of about 20% of the contract value, and also a performance bond of 10% of the contract value. And that was going to stretch its bank beyond where its bank would want to help it. So what the government actually does in that circumstance is to provide the bank with a guarantee of up to 80% of those bond amounts. So effectively giving the bank the security it wants, or sharing the risk with the bank to enable it to actually go to the level that the exporter actually needs. In that way, this business was able to do this contract itself. Its turnover this trading year will be £10.5 million, and it's already going to do £10.5 million again. So it's not just about doing that one contract. What it's actually done, though, is open that door directly into supplying the end buyers. Those end buyers now know where these filters come from that these guys produce, and therefore can come direct and do come direct. So they've actually opened a new marketplace for them. We've helped them to breach that ceiling they had on their turnover. And that's a business based in Stourbridge called VB Filtration Limited. And if you want a copy of the brochure here, their case study is actually in the back of our brochure. The same thing applies with working capital. Again, imagine you're a company exporting handheld spraying equipment for spraying crops and plants with fertilizer. The marketplace for that sort of product is likely to be in remote markets, Africa. And if you're actually going to go out to Africa, what you might want to do as an exporter is try and get all of your money up front. You get all of your money up front, then the buyer overseas will certainly want a guarantee going back. Particular case is a Herefordshire-based business who provides these services out to in this particular case it was Cameroon. They had the advance payment, they needed to issue a guarantee. Their bank were quite happy to do the guarantee, but what it actually did was swallowed up all of their working capital line. It meant that the bank's risk was fully taken by providing this one guarantee. And it meant that the other contracts they got, the lot smaller ones which didn't need guarantees but needed cash, they couldn't access the cash. So again, we came along and provided a guarantee to take away and share that risk, enabling the bank to free up its lines of credit so the company could go on and do its normal business in exactly the same way. We will work retrospectively, so if it's a business that's already got a large number of bonds outstanding, which may be cash covered, which is the banks very typically will take cash to cover these bonds, we can free up that cash to enable the business to go out and do more. The principal purpose for us being here is to help you, the exporter, go out and win more business, not have that situation where suddenly you get 3 contracts at once and you think, well, which one am I going to do? We'd like you to do all 3, and that's our intention. It also means if you go out fishing in the pond that you normally go out fishing in, instead of bringing back the minnow you get, you land the whopper. You land that big contract that's in your dreams and think, I just wish I had the finance to do that. That's what we're there to do. So please, as an exporter, don't turn away business if you think you can't afford to finance it. Come and talk to us and your bankers before you do that, because I think there may well be a solution for you. Now, some important points for you. With the bank-based schemes, there is no cost to the exporter. Again, the same with the advice, we don't charge you 1 penny piece. What effectively we do, if we provide the bank with a guarantee of, say, 50% of their line of credit, we will take 50% of the fees and income they would normally charge you for that service. So they will charge you the same amount, we take half of what they take. It's an 80% guarantee, we take 80% of what they take. But you don't pay 1 penny more. It's important to point out that whilst there are restrictions on that insurance policy in terms of the markets, there are no restrictions on the bond guarantee scheme or the working capital scheme. So that can be for EU markets and rich OECD markets as well. We also don't require security. We also don't require you to secure your liability with the bank before you come to us. There is a scheme out there called the Enterprise Finance Guarantee Scheme, which is aimed at businesses principally trading in the UK, but where you will have to pledge all your available security to the bank before you can approach the government for support under that scheme. This is not the same. This is us taking on risk, providing the bank with the security that the bank might actually want, and we're doing it because we're doing it for a limited contract period. We're not actually doing this for a 2 to 10 year loan, which is what the Enterprise Finance Guarantee Scheme is about. We're there for a very short period, helping you with a contract and then moving away. So it is not the same. Now, to access the bank schemes, you need to go through the banks. However, part of my role is to raise the awareness of the banks of what we're actually doing and how we're helping them. So whilst they are probably a little bit ahead of you, they're not perhaps all the way there yet. So if you go to your bank and you raise the subject and you get a, I don't know quite where we go with this, come and talk to us, the Export Finance Advisors, and we will help. With the insurance policy, we do recommend that you actually go through a broker, because they can make sure that what you actually need is covered. They can make sure that the small print works for you and provide you the cover and the risk you actually want. If you do come for us for an insurance policy, there will be a premium to pay, but it will be relevant to the market risk of the country you're going to and relative to the market. It will not be a very high price scheme, principally because we want to make sure that you go out and do the business. We don't want to stop you doing the business. So those are the key points. Those are the key areas that we cover. Those are the key services we provide. Please don't forget the advisory service. I'm quite happy to be around here for a little while afterwards and pick up any questions you might have. I will advise on anything in terms of how do I get paid when I'm exporting overseas, right the way through to how do I fund that multi-billion-pound contract. So anywhere in between that, if that's where your questions arise, feel free to ask them now or come and see me afterwards.